Okay, this is the Barron's Gold Mining Index, and I hope it's going to be clear on the video. I have a chart for this gold mining index going all the way back to 1938, but what I want to do here as quickly as I can to show the progress of this gold mining index compared to the userx. They're sort of doing the same thing. In the bull market starting in the 1970s. Now remember, the userx started in the mid-70s, but the barrons index will give a reasonably good indication of how the userx would have performed, all things being equal. And this goes all the way up to October, the end of October. This is maybe around October 25, 26, something like that in 2008. And you can see here the index started around the $100 level. It's hard to see in a long-term chart, but that's pretty accurate, in 1970. And you can see where the mouse is moving there on the bottom left-hand corner. In the first cycle, from 1970 to 74, it gained 600%. So 10,000 would have become 60. The userx, which is in black here, actually gained 900%. And where I got that 900 from, even though it wasn't around, was the userx performance in the 2008 first cycle. So I just replicated that because that's all the data that I have to go on. And then from 1974 until 76, both of them had big time corrections. The userx really did lose 75%. And during that 2-year period, the Barron's Gold Index lost 68%. So they perform relatively the same within a few percentage points. And then and now remember from watching the other videos, you know that the userx had a death run high here and a life run low here. And then in the third wave, which is always the best wave in a 5-wave cycle, from 76 to 1980, there was a 550% gain in the Barron's index, and the userx had an 800% gain. Well, why the difference? Probably the makeup of what stocks they were putting into the two different funds. Then from 1980 to 82, Barron's lost 77% in that 2-year cycle. Userx lost 75%. Again, very small 2% difference. They both then gained very quickly in a period of about 8 months, in that range, maybe even 7 months, gained 300% very quickly from 1982 to 1983. This down cycle from 80 to 82 was the same for both. And so just to go back and look at how the barrons performed, I took $10,000 to make it simple in 1970. In the first cycle, that grew to 60, and then in the wave B correction, then in the wave C cycle, that would have grown to 333,000, had a big correction. Then in the wave 5, even though it was a wave 5 failure, from 82 to 83, it would have grown to 990,000. So not bad. In 13 years, 10,000 became 990,000. And you think, well, why am I doing all this research to collect this data? Because not only will my son benefit from this, but so will you and your kids if you're smart enough to be patient. These cycles repeat themselves, and we're now in the middle of another cycle. And after this cycle will be another long bear market, and there will be another long bull market. I mean, this is just the way it is long term. Okay, and then from 1983, both of them went through a long-term bear market, and which it broke out of in 2001. Userx dropped 98%. The Barron's Gold Mining Index dropped over 80%. Now in the first cycle in the 2000 bull market, remember this is now October 2008, we're just completing this correction here. The gains for the userx were 900% in the first cycle. The gains for the Barron's index, 650%. Now part of that would be the fact that the userx lost more in the down cycle, and that's cool because there was a death run high here, so you would have sold. And there was a life run low here for the userx, so you bought, sold, and rebought in this cycle range right here in the $3 range, and had that little correction, went up, and both of them have now, we're not sure if they have completed, but we're very close to completing a major correction. In terms of time, it is the greatest correction ever in terms of the tracking for these indexes. Even though here it lost 98% in userx, and here it lost 80%, but that took 20 years. Here the userx has lost about 66-67%, and the very same for the barrons index, but it was all done in a matter of months. I mean, that is a phenomenal decline. So when this completed down here, let's assume that it's done either now or sometime in the next few months, then we're going to get into this long wave 3 where they're just going to go parabolically higher, and there's going to be phenomenal gains will be had during that cycle. And then I suspect what's going to happen is we're going to get another big time correction. We'll get this counter trend rally that may equal that level or maybe a little bit less. And on the userx we'll get a death run high which we will sell, and then you'll stay away from this sector for a long time until you get another major life run low pattern. How many years that will be, if the pattern repeats itself, there will be a long time, could be multi-decade. The key point, there were a couple of minor life run low patterns during the bear market phase, but the gains were so meaningless, and in a bear market, you know, stay away until it's their time again. And after a phenomenal run, you can expect a couple of decades of decline. It's kind of human nature, I think. Just as a final comment, and I hope I have time in the 10-minute segment for this video to add here, you can see the structure between the two major, the userx, which is the largest gold-based mutual fund in the US, and the barrons gold mining index. I have no idea what stocks make up the barrons index, not really important. I just wanted to get an idea how to measure. When this cycle that we're in now is done, I will then be able to overlay the current cycle with the previous cycle and just see how they compare one to another. These two, the comparisons turn out to be reasonably accurate, and theoretically they should, because they're in the same sector. What I'm really curious to see is how the patterns will play out over the second cycle compared to the first. So if they're within, for example, 10%, that is incredibly valuable information that in the third cycle coming up will have another bearing. Of course, not all cycles are going to be the same, but the more data you have, then the more accurate you can be in trying to predict roughly where cycles are going to begin and where they're going to end.